Good afternoon and welcome to the 86th United Cooperative Annual Meeting. We would like to thank all of you for taking time to attend. It has been determined that a quorum is present, therefore I call this meeting to order. Secretary Robin Craker will read the notice of the meeting and the minutes of last year's meeting.
Good afternoon. Official notice of virtual annual meeting Wednesday, April 20th, 2022 at 1 p.m. Watermark 2009 South Center Street, Beaver Dam, Wisconsin. Purpose to review the Board of Directors and Management Report on the business year January 1, 2021 through December 31st, 2021. To present board election results, to transact such other business as may properly come before an annual meeting of its members. Cooperative Howard Bull, Board Chairman, Robin Craker, Secretary, David Kramer, Treasurer. Minutes from last year's annual meeting, April 20, 2021, annual meeting, the 85th annual meeting of United Cooperative was called to order by Chairman Howard Bull at 10 a.m. at the Ponderosa Restaurant in Beaver Dam. It was determined that a quorum was present. Secretary Robin Craker read the notice of the meeting and minutes of last year's meeting. With no corrections, the minutes stood approved as read. Chairman Bull gave his report and introduced the Board of Directors. President Kramer presented the annual report of the balance sheet and statement of operations for 2020. President Kramer reported the total sales was $749,428,005, a net margin of $32,078,807, total assets and liabilities of $909,825,151, patron equities of $516,497,231, and cash returned to members of $21,398,000. President Kramer reported that it had been a challenging year due to COVID, but the cooperative was well positioned for the future. The motion came and second from the floor to approve the financial report. Motion carried. Chairman Bull gave the nomination committee report and announced the election results. Re-elected to the board of directors Greg Talkin and Robin Craker. Incumbent Director Anthony Schott was defeated by Jordan Crave. Old business none, new business none. Chairman Bull made his closing remarks and noted that the meeting had been recorded and would be available for review via the website and YouTube. A motion and second came from the floor to adjourn the meeting. Motion carried.
Thank you, Robin. Does anyone have any additions or corrections to add to the minutes that were just read? Hearing none, the minutes will stand approved as read. At this time, I'll give the chairman's report. First off, I'd like to introduce our board of directors. Gary Nolden, vice chairman from Prairie du Sac. Robin Craker, our secretary. And where are you from, Robin? Reedsburg. Peter Milsna, Hillsborough. Jordan Crave, Waterloo. Rod Lederman, Denmark. Dwayne Hinchley, Cambridge. Brad Krieger from Shawano. Greg Talkin from Bondwell. I'd like to thank every one of the directors for all the effort they put in this year. Many days I know they were driving 2 hours to a meeting thinking that they had things they could have done at home instead of attending another meeting. Our projects that we've done this past year are listed in the annual report, which you'll find posted. I'd like to thank everyone that's been involved with us this year, especially our CEO, David Kramer, all of our VPs, our branch managers, employees, and especially our customer owners for all your past support and all your future support. We're looking forward to another prosperous year, but as most of you know, nobody knows what's going to happen. So once again, I want to thank everyone for their support. And at this time, I'd like to turn it over to our manager and CEO, David Kramer.
Thanks, Howard. I'll give a financial report. We had a tremendous year. It's my pleasure to present a lot of records this afternoon. We'll start with the balance sheet. Everyone that's in attendance should have an annual report to follow along. We'll start on the balance sheet portion of it. The current assets, you can say total current assets are $558 million versus $474 million and change a year ago. The big difference there is inventories. Our inventories are $439 $3,751,000 versus $362,535,000. Like everybody knows what's going on with the prices of the commodities and inflation that's kicking in, and it was already happening last year on a lot of the commodities that we sell. Following in fertilizer and grain are predominantly the big ones. Prepaid expenses is another area that's different. You can see our prepaid expenses were $53.5 million versus approximately $7 million. There again, as we have higher inventory levels, it costs us more to buy inventory, and as we prepay, we're going to be investing more money in getting those prepaids done. The next section is investments in other assets. You can see investments of $217 million versus $211 million. These are primarily assets in ethanol facilities. We have ownership in 3 facilities, one in Milton, Wisconsin, one in Lake Odessa, Michigan, and Dyersville, Iowa. So our total investments in other assets are $223 million versus $226 million. This is our balance sheet is a little different than a lot of other cooperatives because there's a lot of brick and mortar and cash generating assets in this category, where a lot of other people just have paper in that category. So property and equipment, you can see our net property equipment is $211 million versus $208 million. We did, if you read through the annual report, you'll see we had some major projects that were completed this past year to add to our property equipment. So our total assets are just under $1 billion, $993,465,000 versus $909,825,000. We just had a board meeting today and reported our February numbers, and our assets are over $1 billion at this point in time. So there again, a lot of that's inventory. Our inventory was over almost $550 million as of the end of February. So we are well positioned for spring when it gets here, and it will get here. We have a lot of fertilizer in place, a lot of crop protection products in place. Our executive team did a tremendous job buying products and getting them in place for our members. Then we get into the liability section. We got our total current liabilities are $330 million versus $261 million. There again, the differences are accounts payable, $32 million versus $21 million. Grain payables, $74 million versus about $59 million. And patron prepayments. Patron prepayments, you can see at the end of the year, we're almost $125 million versus about $77 million a year ago. As of today, they're close to $200 million in prepays. So our members have put a lot of trust in us, and we can assure them the product is in place for them this spring. So long-term liabilities, we have long-term debt, less current maturity above of $81 million versus $128 million. So you can see that's dropped off quite a bit from a year ago. Total long-term liabilities then are $84.2 versus $132,184,000. Total liabilities then are $414,497,000 versus $393,327. So you can see they're up substantially. Patron equities, preferred equities, $194 million versus $170 million. This is preferred stock that our members have invested within our company that pay a dividend. The last several years it was 3.5% dividend paid on this. That continues to grow. We actually are not taking any new investment right now because we are at this level. The other big change is our general reserve, $239 million in general reserve versus $197 million. This is a lot of income from our ethanol plants is non-pantry source income, so that goes directly in our general reserve, and we can use it for stock retirement and things and investments in other opportunities in the company. So you can see that's a nice bump from 1 year. Total patron equities then are almost $579 million versus $516 million a year ago. The liabilities and equities then are $993 million versus $909 million. So you can see we do have a balance sheet. We go over to the next page, we talk about the breakdown of our assets. You can see our top percentage is inventories. 44.26% of our assets are tied up in inventories. The next one is investments. 21.85% is tied up in investments. Property equipment is another big one, 21.32% there. And you can see the balance of the small parts of the pie chart. You move off to the left or to the right of that page, you can see total assets, what they've done since 2017 through 2021. They were $621 million in 17. This year they're $993 million. So they've increased by $372 million in the last 5 years. Just tremendous growth. Patron equities, you can see our patron equities, what they've also done in the last, from 17 all the way up to 21. They were $412 million versus 578, almost $579 million. $167 million increase in patron equities. And you see the breakdown of the pie chart. Liabilities and patron equities. Our patron equities are 58.28% of the pie chart. Current liabilities are 33.24%. So the long-term liabilities are 8.48%. So patrons own a vast majority of the majority of this company. Pictures below, you can see we've got some of the projects that are being in progress now. We're adding 6,600 ton of storage to our agronomy plant in Shawano, Wisconsin. That's pretty much completed, other than equipment is being installed next week. So that'll give us some additional storage up there because we have tremendous growth up in that area with our agronomy business. So that'll help us out to put product in place and buy at the right times for the members. We'll flip to the next page and we'll talk about statement of operations, our sales. You can see that number's a big number, $1,105 million in sales this year versus $752 million a year ago. So some of that's inflation and some of it is unit growth. So it's a huge, huge number, and that doesn't include any of the sales of our 3 ethanol facilities. This is strictly sales that were generated by United Cooperative. Gross margins, you can see $142 million versus $117 million a year ago, 12.88% of sales versus 15.58%. So percentage is down slightly, but dollars are up dramatically. And you get into operating expense. The first category is merchandising expenses. Total merchandising expenses are $64,143,000 versus $57,222,000. Big difference there, salaries and wages. You can see our salaries and wages. If you net out the less wage reimbursement, our salaries and wages are $38,315,000 this year versus $34,011,000 a year ago. So they're up about $4.3 million. I think this past year we've had additional employees added, and plus I think we had there was 3 pay raises in this past 12-month period. So and I think everybody knows what's going on with salaries and wages, and trying to keep our employees in place it's been a little bit of a challenge, but we've pretty much done a good job with that, and we feel real comfortable with the group that we have in place. So another area that jumped up quite a bit is vehicle expense. You can see $8.5 million versus about $6.8 million a year ago. I believe we were moving more units down the road. The price of diesel fuel hasn't gone down. See, everybody knows that. And the price of repair and maintenance hasn't gone down either. So our vehicle expense is up. Corn dryer expense there again, $2.3 million versus the $1.5 million a year ago. That's up. Another one that's up quite a bit from where it was the prior year. So merchandising expenses, $64 million versus $57, 5.8% of sales versus 7.6% of sales. Total administrative expenses are primarily the same, $1.4 million versus $1,340,000, 13 basis points versus 18 basis points a year ago. Then we get into our general expenses, our depreciation, amortization. You can see $40 million versus $29 million. Basically, there was big investments made in the ethanol plant in Michigan, and that's what's contributing to this additional depreciation there. So I think one thing to note is the depreciation is really strictly adds cash flow. So you look at our bottom line plus our depreciation, you can see we've generated a tremendous amount of cash this past year. Total general expenses for $46,578,000 versus $34,731,000 with depreciation amortization making up the big change. Then we get interest in others, and brackets our income here, gain on sale of property and equipment, $3,372,000 is a gain versus $605,000. There were several C-stores that were sold this past year, and I think those of you that are, follow it, you know that we exited the restaurant business, and both of our Ponderosas were sold this past year, and both of them had substantial gains. So we're not. That was a sad day to exit that business, but it was time for us to do that. The pandemic has kind of put the kibosh on the buffet-style restaurants. So we're fortunate enough to find buyers, and I think the one here in Beaver Dam will be opening up shortly as a restaurant. I think the one in Hartford is going to be demoed, and there'll be a new Culver's built on that site, I believe is what's going to happen over there. That's what we're hearing. So you see finance charge income, $288,000 versus $407,000 the year before. Purchase discounts, you can see we try to pay for all our bills and get all the discounts we can. $947,000 versus $783,000. A lot of that is discounts for fuel in that 10 days. And CHS is our major supplier of fuel. And we have discounts on feed and fertilizer also that we try to capture all those. Other revenues, $2.3 million versus $1 million, about $1.8 million. There again, we have a number of other rental things. We have the post office in Pickett that we rent to the government. We have some radio towers, television towers, a bunch of things that we rent, land that we rent out to different farmers. So a lot of income coming there. Interest expense, you know, see as we have borrowed more money from the bank and interest rates have creeped up a little bit, we got $2,936,000 worth of interest expense versus $1,874,000 a year before. So you can see that's up quite a bit. Collection and other expenses, 7.6 versus 8.1, down slightly. Total interest and other expenses or other income, we got income there of $3.6 million versus $6.4 million a year ago. So we have net operating expenses of $115,771,000 versus $99,764,000. 10.48% of sales versus 13.26% of sales. Local net margin then for the cooperative is $26,565,000 versus $17,469,000. If you income from affiliates is $42,500,000 versus $9 million. So you can see our ethanol plants did very well. To really look at this in perspective, you look at the depreciation. There should be the depreciation as should be attributed to affiliates would change these both around about 10 million. So we'd have about $36 million of income from the cooperative and $32 million from the ethanol if we look at the depreciation and allocate it out. Patronage refunds, these are refunds from Winfield, Land O'Lakes, CHS, and CoBank. 4.6 million versus about 6.6 the year before. Net margin before income tax then is 73,703,000 versus 33,289,000. So just a tremendous year with both the cooperative and the ethanol industry. Income tax this year then is 4.3 million. Last year was 1,211,000. So we got net margin after income tax of $69,398,000, 6.28% versus $32,078,000 or 4.26%. So a very solid year. And I would have to compliment our employee team, our executive staff, and all of our employees. They've all worked very hard. We've been able to capture some very good purchase pricing and also been able to manage through the logistics of not having quite enough labor. Everybody's stepped up to the plate and gave us 110%. So I have to compliment them all for that extra effort. It doesn't go unnoticed. So if you as customers, when you see some of our employees this spring when they're working their 80, 85 hours a week, tell them thanks, because they do appreciate that too. The next page we'll talk about is total sales, you know, that 1.1 billion. You can see the breakdown of that. Grain is 49.77%. Our grain business is growing dramatically. Agronomy is 22.1%. Feed is 21.95%. And energy is about 6%. Then we have a little bit for the restaurants, a little bit for retail businesses. If you look across at the right side of that page, you can see there's a picture in Fall River. We are actually constructing a transload facility down there that will be bringing in rail cars of potash and DAP from Canada on that rail line and unloading it into a tower there and then distributing to some of our truck facilities to the west. And also probably some of them will come back up to South Beaver Dam. That'll generate us a substantial amount of income, the difference in the freight rates from that railroad to the UP. So then we start talking about volumes. We've been talking about dollars, and dollars can be skewed because of inflation and other things. We always monitor volume on a monthly basis. So you can see what the growth of feed volume, we monitor concentrates of feed, not total grist, just the concentrates that are sold. And if you look at what we did in 2017, we did 306,000 ton of concentrates. In 2021, we did 374,687 tons of concentrate. So we have true growth there, 68,000 tons of concentrate growth in those 5 years. And you can see it's continuous steady growth through that time frame. Jump across the page and you look at grain volumes. This is volume sold, and this varies a little bit, but you can see we did in 2017 52.8 million bushels, and last year was 74.2 million bushels. A lot of that depends on the marketing, how much is being held and how much is being sold. But you can see over the period of time, it's continued to grow in the last several years quite a bit. So that's a growth of 21.4 million bushels from 2017 to 2021. Then we go to drop down below that. We got fertilizer volumes. Here we talk about tons of plant food. Last year we were blessed with an early spring, and with the early spring comes a somewhat early harvest. So we had a big fall in agronomy too. So we had a lot of fertilizer hit the ground last fall too. So it really bumped up our tonnage. And there again, you look at 2017, we had 245,000 tons of plant food. Last year was almost 348,000 tons of plant food was sold to our members. That's an increase of over 100,000 tons of plant food. So tremendous growth there. And we've added, since 2017, we've added several plants. We've been rebuilding bigger plants at some of our locations. A fertilizer plant doesn't last for 50 years. It's very corrosive, and after about 20 years, it's time to rebuild. So we've been doing some of that. We've actually got several more in the project hopper for this year. Fuel, we track that in millions of gallons. In 2017, we did 27.83 million gallons. 21, we did 26.13 million gallons. So it's down about 1.7 million gallons. And the reason for that is we've been exiting some of the C-store businesses in some of our small markets. They're just not lucrative for a business structure as we are. They're more ma and pa type businesses. So I think we sold 5 or 6 C-stores since 2017 to 21. So that's the reason for that market. And obviously the pandemic did affect the driving. It's coming back somewhat, but it's not 100% back yet. So those are pretty encouraging volume numbers. When we get to the next page, we start talking about dollars of income. The net income in the last total of 5 years, you can see in 2017 we had 49.8 million. This year 69.4 million. That's about a $20 million increase from 17 to 21. You can see 19 and 20 were down slightly. That was pandemic years, or was impacting our income a little bit, but we bounced back really, really good for this year. You look at annual sales, you can see our annual sales. There again, 647 in 17 and 1,105,000,000 this year, up 458 million in sales. There again, we had some additional locations and some growth in units, but also there were some inflationary factors. I guess the big one probably is the price of grain. I think everybody knows what the price of grain was a year ago to what it is today. So then we look at return on equity. In 2017, 12.08, 2018, 12.15, and then we dropped in 19 and 20 into the mid-sixes, and this year we're back up to 11.99, or about that 12% return on equity. 12% return on equity is a very good return. I don't think anybody's got any money borrowed getting 12% in the banks, so and that's our goal, is to return that, right around that 10 or 12% return. So. And cash return to the members in 5 years. You look at those numbers, you can see $24,000,008 in 17, $24,306 in 18, $23,136 in 19, $21,398 in 20, and this year we returned $30,944. There again, our investments in our ethanol facilities gave us the extra cash, even during the lean years there of 19 and 20. Still, the board was still very generous in paying out, over $20 million each year. So over those 5 years, we've paid out to our members over $125 million in cash. That's a pretty astounding number. Then the last page is just gives you a basics of $100, the average $100 of sales, where the money went. And I guess if you look at the $100 in sales and you get on to the local net, you can see the local net is $2.40 is what we made on every $100 worth of sales that we generated. A year ago was $2.32, and like I said earlier, the income from the affiliates this year is $3.85, and last year was $1.23. So you can see that the affiliates did, which is the ethanol plants, did very well this year. And the patronage refund received from our regionals, you can see, is down about 42 cents. Last year was 87 cents. Income tax is up slightly. We can see our net margin is $6.28 versus $4.26. But I think it's important to know that $3.85 of that come from our investments in the ethanol industry. So that has been, over the years, that has been very, very good to us and very good to our investor partners. So that is the financial report. I guess we are positioned very good for the upcoming year. We look like it looks today like it should be another very, very strong year. We have a lot of fertilizer sales on the books. Feed continues to do very well on a monthly basis. We got some big projects coming up. We just closed on 65 acres of land in Center Valley, where we're going to be hopefully getting the permit to relocate our Greenville location, our agronomy and grain locations to that site. It's on rail. We're also working with the city of Waupun, trying to get developers agreement. We're close to getting a developers agreement. We have a contract in place to build a new feed mill in Waupun. Our mill here in Beaver Dam was built in '89. Our mill in Hartford was built in 2004, and they're pretty much worn out over the period of time. So we're going to be building one brand new cement structure up there with rail capacity and more capacity to continue to grow the feed business in the future. So those are big projects we got going. Plus, we're looking at some expansions at some of our agronomy plants. So a lot of irons in the fire right now. So, but it's all positive. Ethanol today is, just to bring you up to speed, we were at about 19 cents. Normally this time of year it's at 5-6 cents. We were at 19 cents. And Mr. Biden made his announcement last week of extending E15 through the summer months. And guess what? Ethanol jumped to 50 cents a gallon margin by the end of the week last week. So that was real positive. I have to thank Mr. Big Joe for that. So we are seeing the impact of supply chains and things of that nature too. It's been difficult. Labor is tight. There's a lot of people out looking to steal employees, and we have some trucks. Some components aren't available. We've got several trucks that we've had with small components they can't get that were been laid up for 40 days. We're fortunate enough we got enough vehicles. We've added a few more vehicles to offset some of this, but we're working through it all, and overall we will prevail. So with that, That is my report, Howard.
Thank you, Dave. At this time, is there a motion and a second to approve our financial report? Second?
Seconded.
Motion's made and seconded to approve our financial report. All in favor, say aye.
Aye.
Opposed? Once again, I'd like to thank David and his entire staff. Without them, this wouldn't have happened. There was a lot of effort in this, and a special thank you to all of you that have purchased from us for this past year, and since we've been here, a big thank you. At this time, I'd like to call upon Gary Nolden to do the nominating report.
I met with the nominating committee in February. We had Don Schumann, Jay Vomastik, and Bruce Homburg was elected chairman of the committee. And they went through their customer list and selected some potential candidates to run for our board. They were unable to find any candidates who were willing to run against the incumbents. So we had an election with no challenges, and Brad Krieger, Dwayne Hinchley, and Howard Bowl were reelected to their terms as directors. Thank you.
Thank you, Gary. At this time, I'd like to just let everyone know that we do look for directors. If you look at our photo, some of us are getting older. I've been on for, I can't remember the number of years right now, but if you look back at the reports, I've aged considerably. I will retire. And at that time, or at this time, I'd like to request for any old business. Is there any old business that should be brought up at this time? Any new business? Anything that you want to have discussed? Hearing none, at this time, we are going to have a motion to adjourn our meeting.
So moved to adjourn.
Is there a second? All in favor, say aye.
Aye.
All opposed, no? Thank you. Once again, I'd like to thank everybody who takes the time to view this online and to look over our financial statements. Without your support, it's your company. We just appreciate everything that's happened over the years. And once again, a big heartfelt thank you to Dave and all his staff. Have a good day.